Hello guys, welcome to the Train Parrot. Since yesterday I couldn't manage to put a video, today we're gonna have to do a recap of what happened. There's been some new developments. I can see we have now a pivot on the 4 hour, so we have something to work on for the continuation. We'll look at the daily time frame as well. Of course, we're gonna cover the price of the CME and in general a quick update on liquidity and all that you need to know as we approach Monday with market open, knowing where are all the pieces of the puzzle on the table. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. I'm gonna try to do this update as quick as possible and squeeze in a very quick update on some altcoins. I can see that we are very neutral, so there might be some opportunities to trade over the weekend. If you are a risk lover, I'm sure we can find something. Next week on the 18th, we have the federal interest rate decision. I mean, there's plenty of things going on pretty much everywhere, as you can see in the economic calendar, but I will say that this on Wednesday should attract a lot of the discussions. That is in 4 days, and there are expectations of ease with 96%. And instead of commenting on whether they're gonna ease or not, I'm just gonna go straight into this new reading that we have from the Federal Reserve balance sheet. And as you can see, we have managed to put here this low of 3.23 trillion, and the new reading is 3.27 trillion. It's not a higher high yet against the 3.29, neither is as impulsive as what we had in the previous cycle, but at least it continues to retest the breakout and remain there. So I thought I'm gonna apply an RSI to this and see if we can find something under the hood. So my RSI now is connected to the closing candle of the balance sheet, and you can see that from December 2023 more or less to December 2024 on the weekly time frame, the RSI broke out on 18th of November, fake out back inside, and with this new reading we are back again above the breakout area. So as you can see, it's a very crappy and unclear kind of breakout so far. The only thing that we can say that is positive is that we haven't put a new low with a move like this, and also they have stopped this selling that they did for 2 consecutive weeks. And this is the first buy, so hopefully another week of buy as we approach the FOMC meeting is one way of interpreting that maybe, just maybe, they might be approaching into some easing. All this area in here with these lows coming so far down, we're part of quantitative tightening, and we are kind of in the middle of a big mixed bag in here. So it's not negative, but it's neither too positive. The price of Bitcoin after having reached 101 has been pretty much going just sideways, leaving loads of weeks to the upside, not very different to this area as we were approaching the 16th of December. Today is 14, and if we were to continue mimicking these moves, we still have 2 days, so pretty much Monday will match with this candle, which was on Wednesday. And if we go to 2020, to that week, we don't find necessarily anything important apart from retail sales in the US. The week before had the inflation rate, and I'm pretty sure that once again this event is also gonna play a crucial role in determining whether we continue mimicking December 2020 or not. And pretty much the recipe in here is very simple. We need to just continue putting small candles to the upside until Monday, maybe in this case until Wednesday, and eventually put a big candle towards the upside. In 2020 we had 2 consecutive candles reaching 22.8, getting somewhere in between the first and the second resistance from the CPR. That will be roughly 114k if we were to do something very similar around there. Okay, let's go to the 4 hour and let's focus on TA. Let's leave behind all the speculation based on FOMC meetings, rates, and all that stuff, which is important to note, but you know, I prefer to just focus on what the charts are saying. And at the moment, the 4 hour, we can see that on Wednesday we had the breakout, we had the retest on Thursday. At this point, we were defining what was gonna be the pivot low. I believe that pivot low came up to be 52, and thanks to that, today we can place this support line to protect the breakout. Basically, we just need to find support above 58. That is ideal. It's not necessarily that we cannot continue to the upside, but once we break this, it's a lot more difficult to continue rallying after having lost one layer. With every layer, things become more heavy. So preferably, we want to bounce from this support and put a high. What would be amazing is to take out the resistance that we have at 65, put in a new high. Remember that since we enter at support at 36 on the 4-hour, we've been aiming for an RSI of 72, but now we are going to have to adjust that expectation probably just to 70. So let's update support and resistance. So we have 37. If we were to hit once again the global support, the red line, I'm going to make this line in yellow so we can match it. The white line is no longer important, so I'm going to disable it. So this is going to become 57, and the top we need to reduce it to just 70. So very clear and simple, our support is at 101.3. That was resistance around Wednesday this week. We broke above it, and now we need to respect it to continue with the rally. The target of 70 is coming lower. Before it was 72, but also the price is coming lower from this top when we were on Thursday. So now is roughly 104.6. You can see that this very ugly head and shoulders pattern that people decided to call it differently in the comments from the previous video found support at 99.2, and now we can move the right shoulder and say that this shoulder also respected the same level. Remember, we started calling for a head and shoulders when we were on Thursday and there was no news of a right shoulder. Interestingly, we have formed it. It's not perfect, and indeed it has broken out and it has had 2 candles in a row coming back below the previous range. I think as long as we hold ideally that RSI 58, which is at 101.3, and as long as we don't exit from here, neither, we could still get away with getting some breakout in the next few days. Notice that this pattern can stretch to the right hand side, but not for too long. We cannot see it like this, otherwise we'll break the symmetry of the shoulders, and at the moment is pointing at Sunday. But we know that might be a little bit too early and also inconvenient, because that will become a pump on Sunday itself, which is the weekend obviously, and we close CME at 101.8 and having a pump from 101.9. Remember that these are different prices. One is the price from CME, which is always more expensive, and I'm looking here at Binance on spot, which sometimes is even 1k cheaper. So if they match and this is 101.9 and CME close at that price, it means that we are already on CME somewhere here. And that means that we are already building a gap below the price, which if it continues pumping over Sunday, then it becomes a lot more attractive to bring it back to here. Hopefully that will be just a retest, but in order to be a retest, we cannot pump too much, because if we go to 108, coming back for a retest of 101 is a disaster compared to just pumping a little bit and then coming back and then continuing. I guess that's the point. The support is at 96.7. That is more or less the same type of support that we have in here, but is following the price up. So in case we lost this and it meets somewhere with the RSI in here at 98, we'll see in the next few days how things progress in that sense. Notice that that means the head and shoulder didn't play out, and we have to go somehow for a plan V to look for the next target. Let's look at the daily, starting with the RSI. You can see that is right there against resistance. 64 is resistance, and the reading is pretty much 1 millimeter away from it. So we have managed to hit that resistance instead of breaking below the range once again. Now, the question is whether this is going to break out from here or come back and mimic what we did in 2020, which is losing the white, fooling around a little bit here, and then having the breakout, but in this direction instead of this direction, which is above the white or below the white. I think we are running out of time for achieving something like this. At this point in December in 2020, we were already in this area for quite a while, and we have already mimicked the price action. So the most sensible sensible thing to do here will be to break out, but don't take my word for it. Let the price tell you what comes next and not just speculation. And what I mean by that is see a breakout, confirm, candle close, rather than do you think it will do it or not? That is never something I ask myself. And I see a lot of people asking me, do you think it will break out? I don't care really. I just let the price break out and tell me, hey, I did break out. Are you gonna do something about it or not? Rather than, oh yeah, I think it will break out, therefore I will take a trade because I guess it will break out. It's very different, and I hope you can see the difference. I guess we could say that the Big Well Explorer has settled with the breakdown, which is positive, but I'm gonna show you some other information to challenge my own indicator that is kind of telling us the opposite, because Big Well Explorer is saying that large holders withdrawals are outpacing deposits, which is something good to have. It indicates that there is some accumulation from large holders. But I recently found this post from Martin, which shows all the cohorts, basically pocket sizes of wallets on Bitcoin. You have the more than 10k Bitcoin in yellow, then followed by the orange 1k to 10k, and the shrimps are the smaller ones. And you can see that most of the wallets at the moment are in distribution except from 100 to 1k BTC. And there are two interpretations of this, and people that want just a single one are gonna hate me for this, because one interpretation is basically that there is a distribution, right? And the other interpretation is that there isn't. And don't kill me for this, but that's what I think. I'll give you the positive one. The positive one is that, for example, BlackRock was distributing all their assets across multiple wallets with smaller sizes. And I believe I read in an article that their wallet sizes are now around the 600 Bitcoin. Correct me if I'm wrong. That's what I remember, but I haven't fully confirmed this. It's just an example. My point is that there might be some motivation to not keep too much Bitcoin in a single wallet, distributing them across smaller ones, and this might reflect that, making it this whole area in here look like a distribution, when indeed they're just trying to either deal with security issues, convenience, or potentially even manipulation to make us believe that there is a distribution there. That is what I think, but of course I cannot really prove such a theory. It's just a thought, and of course anyone can say, dude, don't overthink it, that is just a distribution. Let me know what you think about this chart down below. Let's continue with the daily, and let's look at the reverse RSI levels, which I forgot to do. So we are right there at 64 resistance. We have the 86 and the 30 below. Also we have the 60 with the white line. So first, let's adjust the levels. This needs to come down to just 60. So I think everything remains the same. And let's look at what the price is doing. And you can see that once we hit that resistance that day there, we just continue 1, 2, 3, 4 days hitting it at different times, sometimes closing a bit further down and sometimes closing right at the resistance, which is pretty much what we can see here in the RSI. And the same goes with the support. This will be the third day, as long as we close above that, which is 100k that we've been following on the way up, just testing it at different times in the day, which confirms that the daily at the moment is in a squeeze. If you never heard that, it means that you start very wide and you start constricting. Eventually you get to a point where volatility needs to explode, right? And volatility can explode with a breakout to the upside or with a breakout to the downside. And you never marry any side. You just let the price tell you in the momentum where is that. We already had a fake out to the downside. So just purely by past performance, I tend to think that the next one should be either an actual breakout to the upside, confirm and follow by subsequent upside, or a breakout to the upside followed by a fake out and then coming into this area in here. And this, what it's telling me is whatever I do, I will wake up, I will wait for the breakout confirmation. And as usual, and particularly with this setup, be careful with your placement of stop loss, because there is a chance that this could also produce a fake out on this area. At the moment, the volume profile is showing the top of the range at 101.852. The point of control is at 97.9, and the bottom of the range has moved to 88. Remember, the volume profile follows follows the price and uses new candles to calculate the new range based on volume traded. The bottom of the range on RSI is at 77.1k. If we continue going higher, let's say we had a breakout in here and we go like that, then this bottom of the range is also gonna go up and make it more difficult that in the shorter term we can feel the CME gap somewhere in here. So basically that is saying either we do it very soon or we will have to do it very late, call it 2 to 3, 4, 5 months later in the cycle, potentially in summer. Inflows on ETFs haven't stopped. You can see in here every day there are inflows, large ones, smaller ones, but every day is up in the accumulation from ETFs. We are still at 83 extreme greed. We're now gonna have a look at the liquidity. The shorter term, you can see that we are in the process of consuming this that ends at around 103. It doesn't necessarily end there, it just goes lower the higher we go. That is just the short-term liquidity. There's crazy loads amounts of liquidity in here that is from before. Below the price, there is nothing as substantial as liquidating 103 from the shorter term unless we go below 90s. You can focus on the right-hand side of the chart to fully see that. Now looking at the longer term liquidity, that liquidity that we were seeing in red is located more or less where I have the cursor now, which coincides with the order block that sold 14% down in a single candle. So it is a pretty intense level of resistance if we continue going higher. But you can see that from the order block, there were so many shorts that entered there. And those are the ones that are now thinking maybe we should close the short if they didn't take profits, which clearly they haven't because it's still in red. And indeed, it has become even heavier with every move down, with this move down in here, with the breakdown not confirmed. Those 2 weeks cause new levels of liquidity spanning all the way to 107. And that's why on my video on Friday in Coin Bureau Trading, the video is titled, Can we get to 108k? And I know many people are thinking that's a very humble target for a bull market. We are already hitting 104, so just pointing to 108. And those are just people that don't watch the video because they don't understand what we are really doing. We are talking about swing trades. In a swing trade, starting from RSI 36 on the 4-hour on 10th of December and then reaching 108k means 14% in profit, and that's on spot. After that, any leverage that you may or may have not used will be really great for just 1 week of trading. Going back to the liquidity, you can see that below the price is still not as substantial as above the price. And you can compare in here that 105 is definitely the largest. And I will say if we enter something really bearish, a big rejection on the daily, as we say, failing below this white line in a closing basis, starting to get somewhere in here into the 50s, that's pretty much guaranteed that then we will hit the yellow area of liquidity pools. Let's go quickly into the ask versus bid and let's see how the trend continues with diminishing ask liquidity. And at the moment, we can see that it's pretty balanced, but that is a consequence of being on a weekend where volume considerably reduces. So there is no big interest at the moment, no delta of too much selling, too much buying. There's literally a balance at the moment. On the 15-minute, this area in here is looking a little bit bearish to me, but that's on a 15-minute. Sorry, this is on the 1-hour chart. So a little bit more significant now that I notice. So there might be a little bit of a leg down coming up. Looking at the order book, you can see that 105 is pretty heavy, 110 as well in terms of selling. Those are 48 and 43 million. Support has 36 million at 95k and 26 and 29 at 91 and 90. Delta longs versus shorts, it's once again aiming for the top of the range. From August to November, it was such a great alpha. Even November was great. December is kind of not great with the exception of calling out in here for this local top right there on the trend line. That was the top of the doji candle. But after that, we've been just in the middle, slightly hitting against the resistance, but not much. The only outcome that we can take from this is let's be very careful once again once we are at the top. because that's an ideal area to sell because the longs are at a higher risk of getting liquidated. Speaking about liquidations, we have 104 at the top of the price and 99 below the price. Going beyond, we still have the 93 and the 90. We took out the fair value gap at 102. That was something that we were talking about during the full week, and we did it on Thursday. So far, this is looking in that shape of the head and shoulders. We need to complete the right hand side, and you can see that there is incentive at 99 to 97 to destroy the head and shoulders, but so far, sorry, for some reason the chart wasn't updating, but so far the right hand side it's still in a healthy shape in my opinion, so we can still get that breakout without major interruptions. Of course, if we start going for these fair value gaps in there, then we have to move on and ignore this pattern. Guys, if you want to trade Bitcoin, altcoins, consider doing that on Bybit. This exchange is outstanding. They have so many different coins available, not just on spot, but also with leverage using future perpetuals, and the lowest fees to trade as well. In order to get those and unlock up to 30,000 in rewards, consider using the link in the description. I also have 2 exchanges non-KYC, which means not needing to use a VPN, not needing to use KYC, being able to open as many accounts as you want with different emails. One of them is Bluffin, that today is the last day for this promotion. Make sure you take advantage before it's gone away. They give you bonuses for depositing and for trading volume, and if you use the link in the description, you can also get the lowest fees to trade. A second option, also non-KYC, is 2bit. It's a copycat of Bybit, built by the same people from Bybit, but in this case a non-KYC option, offering this time 9k on bonuses and 40% fees discounts. You can find all my exchange links here at the top of the description. Thanks so much for watching. I'll see you on the next one. Bye bye.